Hey, my name's James Simpson and welcome to my YouTube channel. It's a strange one, what's happening in the mortgage market this week. We've got some lenders that are increasing rates. We've also got some lenders that are decreasing rates as well. So we're going to talk about all of those lenders, what's going on, why this might impact you, what should you do as well if you're just about to remortgage or expecting to remortgage in 2024. We'll cover all of that and more in this video. While you're here, if you haven't done already, do subscribe to the channel over there and hit the bell notification. That really helps us. And while you're here, smash the like button or tickle the like button. Do something to the like button, guys. That really helps me with the YouTube algorithm. Look, I'll be honest, that helps me get more views on the content. So I appreciate everyone that gives that a little smash over there. So what is going on? Well, look, interest rates have been going crazy the last few years. And we had 14 consecutive Bank of England base rate increases, didn't we? Which was not great. And that was to deal with inflation. But last year, at the back end of last year, lenders started to fight for our business, which was really good. And the reason for that was transaction volume. The amount of houses sold was down 20%. That's a big hit if your business is all about lending money. And so with the forecast of lower inflation coming at some point, it has dropped significantly. It needs to get closer to that 2%. But that meant that the swap rate, which is the rate that the banks borrow from, was much better at the end of last year. And so all of the big lenders started cutting rates quite aggressively. And even though the bank's base rate is at 5.25, you were able to get rates at certain points under 4%. I just secured a rate last week at 3.99%, which is pretty good. So what's going on? Well, what's happened is the inflation data is not quite as good as some had hoped. In fact, it's stuck where it was. So the inflation data was at 4%. The Bank of England and the Fed are talking about it's going to take a bit longer for these interest rates to come back down. And we've just got into a recession as well. So lots of lenders are starting to put rates up. So let's look at those lenders first and how much have they roughly put rates up. So Nationwide have put rates up, HSBC and Halifax. Now that's a big chunk of the market, and on average they put their rate up by 0.25%, which is not really what we want to see, is it? But what you do have to take into account, in January, a lot of these guys dropped their rates by nearly 1%. So we haven't gone back up significantly, but it's still moving in the wrong direction. And that's not what we want at all. Now, there was an outlier and someone that wanted to be different, and it's good PR for them. And Santander have actually dropped their rates this week by 0.16% down, and that's up. So not too bad. And so that actually, if you look at the mortgage portals, you'll see that Santander is actually near the top now. And so for residential mortgages in particular, Santander seems to be winning on rates now, and that's why they've done this. And so it isn't a massive drop for them, but it does get them the business, and that's how this works. So a lot of these companies see this as a marketing ploy, and they'll often hide the bad news together. So what you'll see is these guys that have put rates up, they all kind of announce it at the same time, so they don't stand out as being the person that's putting up rates. But what's a smart marketing strategy is to be the only one that's cutting rates. That gets you all the publicity. Santander is featured in the Daily Mail, the Sun, the Financial Times, Bloomberg. All these places are talking about that. So it's free advertising for them. Plus, when a broker brings you a deal, what they'll do is they'll bring you the best 2 or 3 deals. Or if you're looking at a comparison site, you'll look at the top results. And so this has shot Santander up to the top. So they're starting to get the lion's share of the inquiries right now. That's very important. They're a big name lender. Everyone knows, likes and trusts them. Well, You might not like them, but you like that they're cheapest at least. And so that gets them more business. And as that business comes in, as they feed that into their mortgage division, once they start getting full up and they've got their teams managing all those inquiries, they might let someone overtake them for a short period of time. And that's really, really important to see. And that's what these guys do. And so you'll see over this year, I think that rates are going to come down. I'm pretty certain that the Bank of England and the Federal Reserve will drop rates, particularly now we're in a recession. So now we're officially in a recession. We've had 2 negative quarters, quarter 3 and quarter 4 of 23. Quarter 3, we went down 0.1%. It's worse in quarter 4. We went 0.3%. And how the Bank of England would normally deal with a recession is to cut interest rates. Now, determining on how this next quarter data goes, so we've had January, we're halfway through February now, so we've only got about 6 weeks more left of this first quarter. If there's a big decline there, you might see the Bank of England cutting rates faster than you might expect. Now, where do I feel that's going to end up for you guys? Because at the end of the day, all you care about is what's the mortgage rate you can get for your residential property or your buy-to-let property. I believe that the best rate that you're going to see from lenders this year will be around 3.5%. Even if the Bank of England drop rates to 2%, which is what they've talked about being the new norm, around that sort of figure, I don't think the lenders are going to pass that on to you because they need to make a margin on that lending. The reason they were able to drop below what the Bank of England had was because the swap rate, the money rate that they borrow from, was lower for a period of time. That started to go up now. But as it goes down, as inflation finally goes, as the recession bites a little bit more, they will cut rates. But the rate that you can get is 3.5%. I made a video yesterday. If you want to know what the best rate is in the market at the moment, I did it for HMOs, which is house of multiple occupancy. I did it for limited companies. I did it for a standard buy-to-let that you own in your personal name. And I did it for residentials as well. That's a weekly series that we've launched now. So do go and check that out. Another reason to subscribe so you get next week's as well. And while you're here, make sure you check out the Serviced Accommodation Accelerator. That's our new program. It's 100 videos on how to launch a profitable serviced accommodation business. It's taken us months to put all that content together. And right now, it's a flash sale price of just £99. So I'm going to put that in the description so you can check that out. I'll pin it as a comment as well. Do go and check that out because I think that's a great strategy to have in this market. Do check out some other content on my channel while you're here. We've got 700 videos now. Why don't you go and start by watching this video right here.